And just as a recap, the things that we should have in play, your trading journal, you should have your trading plan, your risk management or money management system. You should have your appropriate tools. And even though we're all trading the same thing, the general structure is going to be the same, but persons are going to do things differently, right? It's going to be within the same framework, but people are going to do things differently. Still, it's important that you have your trading plan. And if there's anybody who is brand new on the call or relatively new, the most important thing for you at this point would be to go through the material. Don't try to rush to the money. Go through the material and develop your trading plan. This is my trading plan. Ideally, I want to identify something like this and I trade. And so I have my characteristics listed out. You could do something similar. I trade generally in New York session. I may try to take a swing trade in Asian or in London based on where they are at that time, but for the intraday setup, this is my ideal setup during New York session. Then you have, so this is documented, right? This is how I operate. This is what's in my mind, but I have it documented here as well. So at no point am I approaching the charts and I just have an idea that I think price is going to go up and I take a position without seeing something that I was planning to look forward to. So when I see something like this is my ideal setup. Why is it my ideal setup? I have nice risk, I have good directional bias, I have good structure, I have entry triggers. So I'm not risking a lot and I'm trading something that over time generally results in a profitable trade. So I'm less stressed when I take the trade. I know that it's in the New York session. Either my stop loss is going to be hit very quickly or I'm going to be in profit very quickly and I can close and get on with my day. This is why this is my ideal setup. Risk management for position. You need to implement risk management across different time frames, not just for account you should be trading 0.1. Because if you're saying for every $100 on your account, you're trading 0.01 per position, right? You could trade 0.01 100 times within that day for that $100 account, right? And as a matter of fact, if you lose that first trade, that 0.01 with how much ever pips, if you lose that first one, then by your rule, you cannot trade anymore because you're now less than $100. So you have to stop trade after losing one trade. So you have to develop the risk management plan in a way that allows you to lose, expect to lose, because they will come, right? You might have a day where you lost all of the trades that you allotted for the day. For me, my allotment is 4 trades per day. So if I lose 4 trades at 0.03, that's it. I'm done for the day. And I'm not just taking any and every trade. Keep in mind, we still have the ideal setup. So when I get something good, take it. I lose a trade. If I see another setup on another pair, or if I got a second entry in the same pair, I'm willing to take that risk again and again. After that, it's done. And even if I lose all of the trades, I am still okay for that day. Within the daily perspective, I also have a percentage risk. So on any given day, I know how much I'm comfortable with because I already calculated this in advance. I looked at my account. I said, okay, I'm willing to lose up to 10% of this account over a 3 months period, right? Which means that if I divide that by 3, this is how much I'm willing to lose per month. Divided by 4, this is how much I'm willing to lose per week. Divide that by 5, this is how much I'm willing to lose per day. Divide that by how much ever I typically trade on a given day. But generally, the accepted amount is 5 or less within a day. That would be acceptable trades within a day. That means that you're being very selective. If you realize that you're taking more than 5 trades, more than 5 positions a day, you might not be as effective as you think you are being. So try to reduce that a bit, and the way to reduce it is to have an ideal setup. Like what are you looking for? You can't look for everything. Decide what you're looking for, identify those, and your trade count will decrease per day. So that is integrated into the risk management profit target. This is the final part of it. You don't just come up and say, I want to make $100 a day. If you're putting yourself under unnecessary stress, if you're going in the market every day trying to get $100, opportunities will not always be there. So you need to take into consideration risk management first, and then the opposite side of risk is opportunity. It's a two-sided coin. So you have to set it up in a way that your risk is always going to be less than your opportunity. And in my case, it's always 2 to 1 or more. So 1 to 2, sorry. So I'm risking 1 for 2. So my risk per position is 0.3, risk for profit target per position is 0.6. Daily risk, I'm okay with 1. If I get 2% within a day, I'm contented. Weekly, monthly, etc. So that's the plan. So I don't have any uncertainty when I'm going to the charts. Like if I take a trade, it moves up into huge profit. That's my target for the day. I close, I'm done. No need to look back at the market. Check back tomorrow, see if we have any opportunities, make a decision from there on. So trade management tactics. You could have your trading plan in place, but while your trade is ongoing, how do you manage your money? Right, so this is my trade management system. So risk to reward is 1 to 2. If my trade moves from entry to 1 to 1, then I take 50% of whatever I risk, take partials, and then let it run. Depending on if it's an intraday or if it's a swing. If it's a possible swing position, then I move my stop loss into profits when it reaches the 1 to 2 point and leave the remaining to swing. If it's not a swing position, then I set it at break even. If it comes back up, I already made 50% of whatever I was risking on that trade. So I made money even though it came back and hit my break-even point. If it goes down, I make more money. And it's always going to be 2 to 1. So let me show you something about the risk management. I actually put a lot of thought into this risk management system, and I'm going to take this time to go over it. You would notice I have the daily volatility. This is the average daily volatility of each one of these assets. So I know on average, gold moves around 300 bips. Right, so you're not going to try to take more than the market actually has. So for gold, I know that I can comfortably target a 93 pips. And an acceptable stop loss for me would be 4 to 7 pips. And these two parameters here are determined by a percentage. So it's a percentage of the daily volatility. So at no point will I be going for 100 pips on a pair that doesn't even move 100 pips per day. I have the full breakdown here. So for each asset, I know their volatility and I'm looking to risk no more than 15% and going for at least 30% on each position, right? So this 15 and 30%, they're being applied to the average daily volatility of each one of these assets. So let's look at somebody who has really low volatility. AUD and ZB, right? So their daily volatility is 59 pips, roughly 60 pips, right? I'm not gonna set a 45 pip stop loss on AUD and ZB because that's like the whole volatility for the day. That's risking too much, right? And take profit in this case, 18 pips. So it's always going to be 2 to 1, using 15% of the volatility as my acceptable risk, 30% as a substantial enough target. I'm trading with a 20K account through my Forex funds. And this is another thing that I think you guys should look into if you're not already trying to get my Forex funds. At least check out the website, because trading with $100 and trying to take that $100 to 100 million, it could cause you to develop bad trading habits. Notice my percentage that I'm going for with risk to reward, 0.3, 0.6, but it still is, in my opinion, sufficient when it adds up over time, right? And also for me, and it's a point that I like to make as well, think about your trading account as an investment. Don't think about it as your 9 to 5. This is my perspective. I know persons may differ, but for me, I like to have a fixed stream of income. So I have my 9 to 5. I don't plan on leaving it anytime soon, unless I set up some other stream of income that is coming in as easily as the 9 to 5. Right? Like if I have a business, maybe a food business or a clothing business, that I know that on a typical month I'm making X amount from this business, and this is the amount of effort that I have to do to maintain that, then that's a consistent stream of income. Things could also go wrong there. Things could also go wrong with your job. But the point that I'm trying to put over is, don't put yourself in that type of stressful situation where you have a $1,000 account and you're trying to feed yourself from that $1,000 account. For me, I am not living off of this $20,000. That's leverage. And I'm taking a percentage of that to then build it up. That's not money that I have to stretch my hand into to pay bills or anything like that. That's just there. And that's the kind of mindset that you have to approach the charts with when you're trading. Because money, when you see it fluctuating, either going up or going down, it affects your emotion, right? So having that psychology to start with, and that is why somebody was saying affirmations as well. Affirmations are important. You don't ever want to go to the charts with the mindset that you're a loser. You want to go to the mindset knowing that you're blessed and you're going to do well. Have that level of confidence and calm, and the level of comfort to know that even if I lose 4 trades today, I am still okay with that loss, because it's not going to affect my account in any way. And I could come back and I could trade tomorrow. I could come back and I could trade next week. I could come back and I could trade next month. Right. So the entire thing about the money management system is to give you that nonchalant approach when you're going to the charts. It doesn't mean that you don't care about the trades that you're taking. You are still going to be taking only the best trades, but your approach to it would be, is not that you have to win this trade. And if you lose a trade, you know that it was a high probability trade. You followed the standard operating procedure, you're comfortable with the end result because it was all planned out in the beginning, right? You have your system in place. So what I did with this today is I actually printed out a section, and I have a flashcard. So I have a flashcard that shows me for each pair how many lots I'm going to use, what is my stop loss and take profit pips that I consider to be acceptable. And then I use that throughout the day without having to pull up this Excel. I just have that card on me, in my pocket, pull it out, check and see, depending on what I'm trading. I already know, okay, so I'm using this lot size, my stop loss is going to be there, take profit is going to be there. It helps with simplifying the process for me as well. And so daily risk, position risk, you could see here I did some calculations, which is allowing me to lose 4 trades consecutively in one day and still be okay with the amount of money that I have lost. Not an issue. I could even do this for 2 entire weeks and I'm still okay. Why? Because I only lost around 12%. It is not going to necessarily go all the way up to 1.2% because lose 3 trades, it might already be around 12 o'clock. I'm done. I might take 2 trades and it's already 12 o'clock. I'm done. But roughly around 10%. I'm also keeping my 10% in mind. So, but it's a benchmark so that I could know without having to do any calculations, like how many trades can you lose in a day, Hilton? How many trades can you lose in succession for 2 weeks? This amount, what do I do then? Stop trading, go back to demo, take some time off to review. Maybe I don't have my levels and cycles in place properly. Maybe try trading another asset, come off the one, because you have different, let's go to the charts now. We have different market structures on different peers. So this is what I was looking at. I started looking at this 2 weeks ago. Well, not started looking at it, but I identified this peak high 2 weeks ago. I identified when it had pulled off and it was up here. I took a position from there, did a swing up to here, and I closed off. I didn't hold all the way down. But then during this week now, or the beginning of this week, I saw 1, 2, 3. So I was expecting a reversal here. Right? Didn't get that move. So this is an example where you might be tracking something and it's not playing out. So what do you do? Reassess, maybe check another pair. If you look at this, it's possible that this is not going to reverse. It's possible that this could actually be going all the way back down to complete that, right? This could be a pullback and they could just come all the way back down here. All right, so what happens next? Look at something else. Euro USD for this week. What was my outlook on Euro USD for this week? So you notice that one was trending in a bearish direction. For Euro USD, I'm looking at this at least on the 1 hour perspective, it's ranging. Right? So it's going between here and there. I actually took a trade up here, closed off. And I think I engaged some other point as well. But different market structures would occur on different assets at different parts of the levels and cycles. Like if it's coming off of a level, it could be accumulating or it could be doing a pullback. And if you identify that type of structure, then you could switch over from one asset, move over to another asset, see how it's working. Like if you would have lost consecutively for a period of time, switch over to another asset, different market structure, trade that one, see how it goes. If it's still not working, try something else. But when you're losing, it shouldn't be a case where you lose all of your money. Right? You're losing, that's fine. You have enough money to lose and still be alive and get back in the game. So today, my outlook on GN. This is what I have here on GN. So I have a completed cycle over here, 1, 2, 3. Count that as the peak low. So all of this here, I'm looking at as it's in a range. I saw them come at the bottom here, clear out the previous low, and then issue the reversal to go back up. So from here, I'm bullish. Counted this as a pullback. They didn't give the move. They didn't give the move today. Right? This here accumulating. So next week, my outlook on this is still going to continue to be bullish. USD CHF. And as part of my process as well, I already went over that one. Gold, US 30. I don't have a personal markup on US 30, but I'm following in the group. And I gotta check back on it, but allegedly we're on level 3 for the pullback on the 4 hour. How is that? That's 1, 2, 3. Yeah, I think I could see that. That's 1. Pull back 2, 3. So You'll notice I don't have a red flag next to everything, right? Because I'm not looking at everything. At the beginning of the week, like on Sunday or on Saturday even, I would go and check and see, okay, what can I identify some structures on? And I move them up to the top. These are the ones that I'm gonna focus on for the week. So that's part of my system. What what other aspects do you guys integrate into your system that I wouldn't have mentioned here tonight? What other aspects of the system do you have?
For me, I think you covered everything. I don't know if there's anything I would add.
Okay. Risk management tool, Excel sheet. No, I do not have the average daily volatility for the indices, nor for crypto. But if you have it, if you're able to get it, you could update the sheet by, see, for BTC it shows 0, but if you're able to get it, you could just plug that in here. Plug in the pip value, whatever is the pip value for BTC, and pull down the formula here. And that's gonna update it. I don't have those volatility and pip values figures, but I have an idea of how US 30 works. So I do trade that from time to time, but I don't have that in here as part of the automated system. Does anyone have a template for a PIPS percentage plan that they can share? Some things you're implemented. So you answered Lisa there, right? You could also use this here, Lisa. This actually shows. So you're asking for a PIP percentage. Yes, so this year you're going for 30% of the volatility and you're risking 50% of the volatility. And you actually have the number of PIPs that this is equivalent to for each asset. And you have to use all of these together. So for every trade that you take for whichever pair, if you use these parameters, you're always going to be risking 0.3 and 0.6. And you'll be taking 15% of the volatility as your risk and targeting 30% of the volatility. Your account value may change. Say if you have a $1,000 account, this is what it converts to. But I strongly recommend, even if you don't want to go and do the challenge for MyForex funds, MyForex funds is cheaper as well. FTMO is more expensive. So look into the MyForex funds. There's something called an accelerated account. You could purchase that. There's also the rapid or the evaluation. So look into them, because if you're 138, it's for the $20,000. If you're purchasing an evaluation for 138, you pass the evaluation phase, you get the $20,000 live account. How much was your total investment? Only 138, right? And you're trading with $20,000. You could make that 138 on one trade, and you already break even, and then you trade with peace of mind. You don't have to worry about growing an account. You're just worrying about, but you're not worrying. You're just making profits whenever you get the opportunity. This Excel sheet, I actually have it on my YouTube channel. I'm going to upload this video and attach this Excel sheet at the bottom of it as well. All right, so we have 5 more minutes on the call. Anybody has any specific questions they want to ask? No? Okay. So just a recap. So summary. If you're new, don't try to make money. You invested how much? $1,000, $500, $250. How much have you invest? Don't try to make that today or next week or next month. Take your time and learn the material. Once you learn the material, develop your own trading plan. Don't worry with Justine's trading plan. Don't worry with Glennie's trading plan. Don't worry with Hilton's trading plan. Don't worry with Georgia's trading plan. Yours is going to be similar. It's going to have the basic elements, but you're a unique individual. You know what works for you. Build your own trading plan. Have your own money management system. My money management is very, very, very conservative. You don't have to go for 0.3. You could be risking 5%, going to 10%. Whatever makes sense for you financially. Just scribble it out, see how it is, and take everything into consideration. Your ideal setup, your risk management system, how long can you consecutively lose, how many trades do you need to take per day, all of those things. It has to be personal. And the next thing, talking about making this personal, it shouldn't be a case where you're asking anybody who you consider to be doing excellent in the group. It shouldn't be a case where you're asking for anybody's opinion. Like, tell me what you think about this. Yes, it's a educational system and you will have support, but the end game is for you to be an independent trader. And I firmly believe if you go through the material and you apply yourself, you would be able to start developing things on your own. I was away for a month. I did it deliberately to literally block out everything. A few persons reached out to me. Thank you guys very much. It meant a lot. But I wasn't in the group looking for this and looking for that because the idea is to become an independent trader. So keep that at the front and center of your mind. This is not a signals group. The stuff that is being presented here is empowering. Take it seriously, study it, develop your own personalized trading plan. You could take my risk management system, adjust it so that it works for you, and run it from there. All right, so that's it. That's it for me, guys. Have a good night. It's always a pleasure. Goodbye, everybody.